Greetings from FinStudyClub. My name is Ankur Kulshrestha, welcoming all viewers to the session on cash flow statement, wherein we are going to talk about the movement from the indirect method to the direct method. Now this is your part 2 of the video series, wherein in part 1 we have already discussed about the CFO being converted from the indirect method to the direct method. So therein we had already talked about that the direct method can be used for CFO, CFF and CFI. In this session we are going to focus upon how can we calculate CFF and CFI by the direct method while we are given the inputs of the indirect, which is income statement and the balance sheet. Therefore, before moving on, it is very imperative that the viewers have looked at not only the overview of cash flow statement, but the detailed session that we had recorded on the direct method, the detailed session that we have recorded on indirect method, and then the part 1 of the conversion. So to speak, this is really forming a good chain, and we are almost towards the end of finishing cash flow statements. Well, a very quick overview of what we have done so far in the conversion process. I'm sure I don't need to go into details of it. It is pretty much the similar slide that you have done in part 1. Here we had said that generally direct method focuses on giving out the cash flows upfront, and for that the bank account is what we generally need. However, in the current scenario we are given income statement and the balance sheet, which are generally suitable for indirect method, but the expectation is that the presentation has to be as per the direct method. So we said that we are going to try and bridge the gap between the income statement and balance sheet by creating different relationships in different ledger accounts, using different equations and all, applying logical thinking. That's how we have done it in part 1, and this is going to be our methodology. So this methodology is somewhat different than what we have adopted for CFO. So the methodology that we are adopting now states that this time we are going to select the balance sheet item first, let's say long-lived asset, which is non-operating. Now, point to be noted, since the focus of this module is on the investing and financing, which are non-operating in nature, my endeavor while I will be looking at the balance sheet is to ignore any kind of an operational asset or a liability like debtors, inventories, cash, bank, or for that matter marketable securities, or current liabilities, any kind of outstanding salary, etc. etc. I am going to focus upon the non-operating assets and liability, which is, let's say, long-lived asset. Once selected, I'm going to try and find out if there is any transaction related to that in the income statement. Let's say there is a transaction called depreciation, or there can be a transaction called loss on sale of assets, or gain on sale of assets. So all these are present in the income statement. The idea by which I am doing my step 2 is to find out what would have happened during the year with a particular ledger account that I have selected, because at the end of the day, which means step 3, I will actually have to make some sort of a calculation for what would have happened in the particular ledger account, or, by what it would have gone up, by what it would have gone down. So therefore my step 2 will give me the additional information. Very critical piece of the entire step. Step 2, one of the most important part. And once you have done step 2, then I'm going to, like I said, identify any kind of a relationship between the two and try and find out the cash counterpart. I'm sure things like these are not understood without an example. So here it is, one mega example that I'm going to break into 4 pieces going forward in my this video recording. Here it says that the balance sheet has got building furniture, 10% bonds payable, share capital and securities premium. You would see that I haven't taken any kind of a I haven't taken any kind of an operating asset. So here let me call this as excerpt, because it isn't a complete balance sheet. And then it's an income statement, which is a complete income statement, pretty much the same which I have used in my previous examples, just to draw good parallels. The way I would do is I am going to select one particular non-operating asset, which was my step one, let us say building. Then I'm going to identify if there is any kind of information in the income statement related to building, which is, let's say, here. So I am going to try and make a connect of the two and try to find out the cash counterpart. So that's how my endeavor will be. Similarly, I can do with, let's say, the share capital. Let's say share capital is comprising of both of these things, but to be honest, there isn't anything related to share capital in my income statement. So be it, that means there isn't any major activity which I can get information from this income statement. So I may have to do sometimes without this step number 2, because you never know, there is a information, there may not be the information. So jumping on to specific example, so the way I have done is I have broken down the same example into smaller parts, and here I'm going to focus only on the building and its ledger accounts. Well, in the curriculum there are different equations given, and the way CFA Institute explains is they try and make a long equation with some pluses and minuses, which sometimes students try to mug up. Well, this is absolutely not the way to go, because A, the standard format of the equation might change. B, in the exam the question might start from a different point, and even practically I really don't want my students to mug things up and go out for the jobs, because at the end of the day the practical scenario might start from anywhere and anywhere. So therefore, let's just try and understand this point very carefully. It's actually very simple. So I just want you to hold some common sense, and it doesn't matter you're a commerce, you're a sciencey. The only thing that matters is whether you can apply a good judgment. Now the point in case here is there is a building, and in absence of any information I can see that there is a plus 20,000 in the building account. Now if I wasn't given any kind of additional information, the only way that I can think is why would building increase? Obviously the balancing figure is I would have purchased this building, and therefore my cash flow from investing would go down, because by purchasing my cash would have gone out. However, there is a bit of information available to me in the income statement. That's the power of additional information. The additional information changes your perspective. It changes your perspective. Now, the relevant part in the income statement is the amount of depreciation. I just want my students to look at it in a very simple manner. All those who are commerce graduate can quickly make a ledger account, but I really don't want them to follow what is not required in CFA. So I'm going to just ask my students to follow what are the transactions with which my building will go up, and what are the transactions with which my building will come down. The starting points, of course, building being an asset, there is something economic benefit that I need to receive from him. So therefore the amount of opening is on the plus side. It says that the depreciation is 500, which means during the year building must have fallen down by this amount of depreciation. It also says that the closing balance after doing whatever else is 1,20,000, which tells me that the pluses and minuses including the closing balance have to be same. There is a balancing figure which is of 20,500, which obviously will be building purchased, which obviously will be the building purchased. Okay, so the way I've been able to find this out is I've been able to create a plus and a minus, and I've been able to very simply find out how much would have been the CFI. Now applying my A is equal to L plus C, if my building account goes up, then cash would necessarily come down, and therefore it's a CFI goes down by 20,500. Okay. Well, obviously you must be wondering, if the balancing figure, which in this case was on the plus side, if that happens to be on the negative side, then what do we do? Now this is exactly what I'm going to explain in my next example, where my focus will be on the furniture. Like I was mentioning to you, that the CFA Institute is trying to, find this out using an equation. It says cash spent is equal to depreciation plus increase in building account, which basically wants to say 500 plus 120 minus 100,000 is equal to 20,500. My only point with this is, well, doesn't really sound very logical. I will have to mug this up. Increase is added and therefore decrease needs to be subtracted. Again, the problem which I discussed in part 1, you really cannot spend entire energy on ratifying this plus and combinations of increase and decrease. You got to really understand it in terms of a logical process. Let us try and understand furniture. Now, if no additional information is given, I would assume that the furniture worth rupees 5,000 has been reduced. That means to say this must have been sold, etc. However, there is some kind of an additional information given, which says that there has been a depreciation of 1,500. So again, following my logical step, I am going to make a statement for furniture, which says my opening furniture is 50,000. It will go up if I am going to purchase. It will go down if I am going to depreciate. Now, whatever is the plus and the minus, the net result is coming out to be 45,000, which means to say that your 50,000 plus your purchase minus your depreciation is equal to 45,000. You would find that X is turning out to be a negative value. This is the problem that I have with forming equations, because if the purchase turns out to be negative, then you'll have to twist your mind and assume that it's a sale. Well, really we can simplify things in a much easier manner, which again, like I said, let's make a plus and a minus thing for furniture. So your opening balance is 50,000, your closing balance is 45. It again being an asset, so the opening balance will be in the debit side, the plus side, and the closing will be in the negative side. Then you got to say additional information, 1,500 worth of depreciation. Now try and find out the balancing figure is coming on which side. The balancing figure is coming on still the negative side, worth rupees 3,500. This 3,500 worth, which is a reduction in the value of the asset, must be the sale. So therefore A is equal to L plus C. My asset worth rupees 3,500 has gone down. I am not aware about any gain or loss. If there was any gain or loss, then it should have been given here. I'm going to take an example where gain or loss would also be given here in the income statement, but it seems since no gain or loss is given, there should not be any, and therefore cash worth rupees entire 3,500 should have come in. So therefore your FFI, your CFI is going to go up by $3,500. Let us resume our example, wherein, like I was saying, you would be given the loss or gain as well. So now, without wasting time, I am going to make a plus and a minus account for furniture. When would furniture go up and when would it come down? A plus or a minus? Being an asset, the opening side is on the plus side, and the minus part is, let's say, the closing is here. The key point is there is already a depreciation worth rupees 1,500. 1,500 is here, and there is a gap of 3,500, which means that the furniture account has gone down, which means there is some kind of a sale. Now I really need to find out that how much is the cash comes in. What I want to tell the users by this example is this 13,500 is not the cash. It is the reduction in my asset account. So by doing an A is equal to L plus C, all I can say is that my furniture account has gone down by 3,500, but that doesn't mean that's equivalent to the cash that has come in, because now I also have an additional information, loss on sale of furniture. The loss is my reduction in the P&L, which is fall. So as a balancing figure, my cash would go up only by $3,300. So your CFI goes up not by 35 this time, but by $3,300. Well, what you can also understand this is cost price plus profit is equal to selling price. This is the cost of the asset that goes out, and this is the cash counterpart. Now try and fit in the values here. The cost was 3,500. You incurred a profit of negative 200 is equal to the cash counterpart will be 3,300. So there are different ways of looking at the same thing. Ultimate objective is to find out the cash flow by the direct method. We also have another example wherein there is a gain. Now in case of a gain, your 50,000 is becoming 45,000, where 1,500 is the depreciation. This is the plus side, this is the minus side, and the gap overall is 35, which tells me that the cost of the furniture which has been sold is 3,500. A is equal to L plus C. My furniture goes down by 3,500. That's the cost, but that doesn't mean that's the cash sale, because now there is a gain of 700 which I can find out as additional information. Therefore, if you would remember that I had told you that this second step is so very critical of identifying any transaction from the income statement or otherwise. This is very super critical, to find out the additional information. Now coming back to this point, your cash collection in this case will be 4,200, which includes the 35 of the cost plus profit is equal to selling price. So 35 worth of cost plus 700 of profit that you've made is equal to 4,200. Okay, so your CFI in this case is 4,200. Let's talk about the third example where we're going to focus on share capital, which is very straightforward. It basically says that your share capital from 150 have gone up to 165, which means an increase in the capital by 15,000. What is also relevant to see is that the securities premium, also called as additional paid in capital, have also gone up by 3,000. There isn't any kind of additional information which is available to us. That makes our job fairly simple. My contributed capital goes up by 15,000. My additional paid in capital goes up by 3,000. What should be the balancing figure on cash? Well, extremely straightforward, 18,000. CFF, cash from financing, goes up by CFF. Let's try and understand what happens in case of the 10% bond, which is also a financing cash flow. It says that your bond liability is going up by 2,000, and there is a relevant information available in relation to the interest. What is very super critical for the users to understand is that bonds payable is the principal, and this is the regular interest. There is a relationship, but not as integrated as the asset and the depreciation itself. What I'm trying to say is the principal repayment and the interest repayments are both shown in separate ledger accounts. So I will not confuse myself by mixing the two, which means I will not include the interest to the principal portion. Interest needs to be paid every year, and principal needs to be paid as per its own schedule. So what I'm trying to say is the interest payment of 1,800 needs to be shown in CFF separately, and your principal receipt of 2000 needs to be shown separately. There is net 200 inflow which has come in from the bondholders. What I'm trying to point out is, if I'm going to make a ledger account for the bonds, opening balance is 11,000 and the closing is 13,000, there is a 2,000 balancing figure. The short point I'm trying to make is, in this aspect, in this ledger account of bond, there will not be any entry for the interest. There is no entry for the interest. Interest is a separate account that needs to be made, without getting confused from anywhere else. So I hope that the examples that we have taken are clear and helpful to give an understanding about how to calculate the cash flows, which are financing or investing, where the balance sheet and income statement are given. Try and bridge the gap. Do not mug up the formulas, and just try and make a logical fit for the same. I hope this session was useful. We would love to have any question, query, feedback that you may have at FinStudyClub@gmail.com. We are uploading the videos on the YouTube, so subscribe to our channel for continuous update, and keep posting your feedback. Thank you very much. This was Ankur Kulshrestha from FinStudyClub. Look forward to speak to you in my forthcoming sessions.